They just keep coming at us here this week, don't they? It's about that time of day again, guys and gals. Boy, that time flies when you're having fun. It's about that time to get back to work here this evening. We have a lot to cover in tonight's video newsletter. It's Wednesday evening. It's October the 9th, 2019. My name is Joseph, by the way. And as always, welcome back to your nightly newsletter. Now, if you're here for the first time today, I help traders find high-quality trade setups using a very simple three-step trading strategy that we teach and trade every morning together in our trade room. But my job's a little bit different tonight. My job tonight is to help you guys find the best levels of support and resistance, the best entry and exit points for tomorrow, and most importantly, the easiest traps to avoid so we can keep growing our account tomorrow morning in the trade room. Got a lot to cover here tonight on the video. We'll grab the calendar first, of course. We got some big news tomorrow morning, but we got some visitors in town to Washington, D.C., and that's, of course, what the big news is for tomorrow. We'll talk about that in just a moment. And, of course, we got the charts tonight. We'll grab some oil, some S&P, some Nasdaq, and we'll wrap up on that mighty yellow metal, the gold futures here tonight. I'm going to start off here with the black gold, though, the Texas T, the crude oil futures, because we've seen this story before, right? Just a few days ago, oil's right back inside that range again. And, well, let's not talk about it. Let's grab that chart and let's get to work here tonight on this video newsletter. So here we are now. We're back inside that trading range. Surprise, right? Surprise. We talked about this last night, right? Oil is really rotating back and forth inside of a range, right? What goes up usually comes down. What goes down usually comes up. Now, we've been waiting for potentially a breakout of this range, but so far, oil continues to keep rotating back and forth. So we are going to continue that process right here this week for tomorrow, especially on oil, right? We got the market back into the range now, right? I'm looking to buy it as it comes down below. I'm looking to sell it right as it goes back above. And most importantly, I want to stay out of the middle of that trading range. Now, as far as specifics go on this, got a very strong move down on oil here to finish off today's session. And you'll notice what I've done here. I've connected these lows, brought it up to those highs, and I'm looking for a chance to sell this sucker right up inside the high of that, what I call a hidden channel tomorrow morning. Now, like I mentioned earlier, this should look familiar, right? I'm getting deja vu right now. Didn't we just see something like that? Oh, we did right back here, right? Just a few days ago, right? So that big move down to finish off the session, and whoops-a-daisy, right? It kept on going. So we're going to dig into that a lot more detail tonight. We'll talk about the specific setups to look for tomorrow. We'll talk, obviously, what a breakout might look like, right? God forbid this thing does, right, break free of this range. We'll talk about the breakouts. We'll talk about how to buy low, how to sell high, and of course how to avoid, right, some of those pitfalls for tomorrow's range-bound session. Over on the S&P here tonight, S&P wasn't a pretty one today. It was a pretty ugly chart, of course, right, on the S&P today. You could definitely tell these markets were waiting for some visitors coming to town here, right, tomorrow. I joke around about it. We'll talk about it here in a moment here for big news on the schedule here for tomorrow. What do we know right now? We know right now the market has a big bull bias. We know we're inside of a really tight range there, right, at the beginning of the session. And it looks like after all the dust settles here today, we're right back in that same range again. So we have a bull bias. It's a range-bound market, right? Range is telling me I want to buy low. And I've got a really nice area down here, right? I've got a falling support level. I got a rising support level. I got a big round number. I got a buy zone down here. I like this area down here to be a buyer on the S&P. But I'll tell you right now, we heard some headlines today that definitely make me think this market may have some legs here up to that measured move. We can't trust the breakout though, right? Look what happened the last time. Right? Look at the last time. The last time I tried breaking out, what happened there? It failed right back into that range. So we can't trust that breakout. So I'm going to talk about two patterns tonight, right, to qualify that breakout. One aggressive, one conservative. And of course, we'll cover all the details here on the S&P. The Nasdaq, now Nasdaq's in a much, well, I wouldn't say different because it still has that bullish bias to it. It still has that range to it. But there's one big difference. Can you see it? Right? Can you see it? There's one big difference the Nasdaq did the S&P didn't do today, and that's that higher high. Higher highs are a big deal, right? Higher highs are a mindset shift, right? When the S&P went up and failed to retest its highs, imagine a balloon letting out all the air, right? The buyers definitely have more of the guts, right? They've got more cojones right now on the Nasdaq, and that really gives me a lot more of a clarity for my plan for tomorrow. Really, in a nutshell, it all boils down to I have a combination right now of a trading range and a spike in channel. Both of these give me that buy zone down around that 76.60 area, right? That's the ideal here for tomorrow. I'm going to talk about 3 different patterns I'm watching on the Nasdaq to buy low. But what if we don't pull back though, right? What if we keep going higher? I've got some real big important levels waiting up top here at 77.80. Again, we can't trust the breakout right now because most breakouts in range-bound markets fail, which I'm sure you've learned the hard way, like we all do early in our career. But what do we look for, right? Looking for 2 patterns as we go higher here to qualify the breakout and capitalize on that breakout. We'll talk about the Nasdaq, and of course we'll dig into more details of why the Nasdaq is a little bit different in a very important way, right, than the S&P here tonight on the video. And of course, last but not least here on the gold. Gold, I'll tell you right now, gold I can almost guarantee you, besides the range, I'll bet gold has a lot of people scratching their heads right now. And again, you can definitely tell these markets are waiting on something here this week because gold they're trying, right? They're revving the engine, but they're leaving it in park, right? The e-brakes on, as they say. So you definitely see they're revving the engine, but they're not getting very far here on gold. What do we know about gold right now? We know we're bullish. We know we're rounding back and forth inside that range. Range-bound market says buy those lows, sell those highs. Obviously, being a seller in this market is a very different plan than being a buyer in this market because of the overall bullishness of this. There's one big variable, though, that I think is really something you got to pay attention to right now. It's a little bit hidden in here, and that is that triangle, right? Triangles are, at least for me, triangles are a big deal because they give me timing, they give me location, they give me direction. So we're going to dig into this a lot more detail. We know it's a range, but that triangle puts a timer on it. Right? Now time is involved in this trading range, unlike a market like oil, which has been using the same range here for over a week now. So gold has a bit of an expiration date to it. We'll talk about how we're going to use that to buy low, to sell high, and obviously, right, if we get that breakout, right, those breakout patterns I've been talking about here tonight in the introduction. So a lot to cover here tonight on the gold, that triangle, spike and channel on the Nasdaq, S&P. Yeah, the messy S&P, and of course, right, that oil, that we're reminiscing about something we saw earlier this week, right, on the oil. Guys, I got so much to talk about here tonight, and I can't wait to break into it. Before we jump into the video tonight and put all of this together here on the video, I just want to remind you to make sure you join our mailing list, because believe it or not, right before I send out this video, right before I publish this video on our YouTube channel, I send out an email to everybody on our mailing list. That way, everyone on the mailing list gets the first crack at this nightly newsletter. I want to make sure you get that email, so join the mailing list. All I need is your name, your email address, and then hit that subscribe now button on the right-hand side. And don't forget, guys, when you subscribe to join the mailing list, your job ain't over yet. You still need to go in, check your email inbox. I'm going to send you a welcome email with a verification link and a bunch of great free resources in there. So find that welcome email. If you don't see it in your inbox, make sure you gave me the right email address, right? That happens sometimes, or it might be in your spam folder. So check your spam folder if you don't see the welcome email. And if you see anything in the spam folder from me, make sure you whitelist my emails. That way you never miss the good stuff coming from us. Also, I want to encourage you guys, any questions, comments, concerns, any feedback, drop that in the comment section below. What do you love about this video? What do you hate about the video, right? What would you change about this video? How about questions, right? If you're here for the first time today, maybe I use some terminology you're not used to yet. How about questions? Drop those questions right in the comment section. I'll even enjoy some good trading jokes down there as well. I'm always hanging out down in the comment section below. So drop me some comments in the comment section. Questions, feedback, positives, right? Constructive criticism. I am always listening, because I'll tell you right now, I've been doing this newsletter for almost 10 years here at School of Trade, every evening with you guys, and I haven't been able to keep it doing this long without listening to your feedback. So whatever your feedback is or questions you have, drop those in the comment section below. And while you're down there, by the way, hit that thumbs up button for me tonight on YouTube. If you tune in every evening to watch this video newsletter, if you get value out of this every evening, it would mean the world to me to help me support this channel by hitting that thumbs up button, subscribing to our channel. Believe it or not, every time that thumbs up button gets hit, right, YouTube helps to expose this video to more traders. So thanks for your questions. Thanks for your trading jokes down in the comment section below. Hit that thumbs up button, subscribe to the channel, right? And don't forget too, if the comment section isn't exactly your thing, please don't be afraid to call the office. You know, I'm a human being. I'm a pretty nice guy, right? I got my moments like everybody else. I'm a pretty nice guy though. Don't be afraid of me. Call that toll-free phone number, right? Call the office. I'll answer the call, answer all your questions. You know, maybe you've got questions about our free trading classes, or maybe you've got questions about our free pass to our trade room, or maybe you want to know who the best pricing for brokers are right now, best data feeds are. Call that toll-free phone number. We'll give you the information you need. That way you can save time, save money, right? Avoid losses and avoid all the stress that most people go through when they first start their trading career. Don't be afraid to call the office, right? My wife Megan and I are always here to help you guys out. But in the meantime, though, let's get this party rolling here, right? We're all dressed up and ready to go. Let's get out of here. Let's train is moving, leaving the station here. Tomorrow is Thursday. It is October the 10th. We're trying to finish up what, again, as I mentioned earlier in the week, is a kind of shortened week here this week. And there are two real big reasons why the markets are going to have a little bit less time here as we go into the end of the week. First of all, next Monday, the 14th, is the Columbus Day holiday. So you got to keep in mind, next Monday, right? Next Monday is going to be a holiday. Markets are closed. Well, let's be honest. Technically, the markets, I believe, are open on Monday, but you want to stay away from those markets whenever the banks are closed, schools are closed, right? There's no major news to be released that day. So you will see markets moving next Monday, but yeah, whenever you've got the CME saying, right, be careful, we want to pay attention to that. My rule of thumb is when the kids are out of school, the banks are closed, right? You want to be out of the markets, right? So we try to take some time off on Monday for the holiday. That means now that, of course, the Friday, right, the 11th is going to be considered pretty much a trader's holiday. Now, the reason why, right, the reason why I think that Friday session is going to potentially be even more dramatic is because tomorrow we've got this kind of highly anticipated, multi-day trade negotiation going on. Supposedly they're in town today, right, from Beijing. Apparently, this is the biggest group of negotiators the Chinese have ever sent to the U.S., right? Whether or not that's just, propaganda, I don't know, right? But I've heard multiple sources, multiple neutral news sources saying this is the biggest, right, kind of, crew they've brought with them the whole time. We've seen some very positive back and forth, right, between the U.S. and China the past couple days. And so tomorrow, right, Thursday, they begin the talks. Friday, of course, they will commence the talks. Tomorrow will all be about news leaks. Right? So tomorrow it'll all be about, he said this, she said that, Trump said this, right? Xi said that, right? It'll be all about those little, snippets, right? And that will dominate the market most likely tomorrow. So tomorrow might be a little bit sluggish and then rally, right? Sluggish and then choke, right? We might see that kind of starts and stops here tomorrow as those negotiators, and not really release information, but as the news media extracts, right, assumptions from it, and of course the markets digest to it. Then Friday, with that holiday weekend right around the corner, and with, of course, right, we hopefully will hear something regarding these trade talks. I would imagine Friday is a relatively challenging day, low volume, heavy on speculation, heavy on sitting on hands, everyone waiting to see what's going to come out of these meetings. We may see a pretty big finish to Friday, right, but I have a feeling most of Friday will be a little bit of a mess, right, I would imagine. So I am, as always, I am a perma-optimist, right? The glass is always full, right, on my table here in the office. So I am obviously optimistic for tomorrow. I come in every morning with a clear mind, a positive attitude. I'm expecting the best tomorrow morning, but I will be aware that with that trade talks going on, things may get a little bit bumpy and sluggish like we saw today, right, some of these markets. As far as news goes tomorrow, we get the CPI and the jobless claims coming out at 8:30. The jobless claims is a non-starter, but that CPI, remember, anytime you see PPI, right, like on Tuesday, CPI, right, anything I, right, those indexes, those are inflation reports. Inflation means dollar, right? It means gold. It means currencies. So the yellow metal traders out there, currency traders out there, definitely want to be keeping your eyes open tomorrow around that 8:30 news. Later on in the session, we've got some Fed speakers, right? We got Kashkari and Daly at 12:15 and 12:30. So if you're hanging around after lunch, watch for some possible rumors, right? Some possible headlines coming out of those into the afternoon session. But again, I'd be lying to you if I said I wasn't expecting I'm expecting these markets to be a little obsessed tomorrow with waiting on what's going to come out of Washington, D.C. regarding these trade talks. We also know, right, that the escalations in Syria are on our minds right now. Fed has pretty much committed to cutting rates later this month. So really it's all about, right, that trade talk for tomorrow morning. And as always, tomorrow morning, bright and early, 8 o'clock Eastern time, we're going to get together and execute the plan with all of our clients like we do every morning. You know, our trade room is a great place to kickstart your day because that way you get a great head start on the day. You can trade alongside me, right? Hang out with us in the trade room and make sure you don't make the rookie mistakes that most of us make and lose money early, right, in our trading careers. Let's jump into our charts tonight. Crude, S&P, Nasdaq, and gold. Let's get this party started. Now, I gave away a lot of this and the introduction here this evening. But as you can see, though, right now, most important factors here right now on the chart, we have a range here on crude. There's not a lot that's changed here. We've got that trading range here, right, on the oil. Right, and last night on the newsletter from last night, right, Tuesday evening's newsletter, we talked about the best plan for range-bound markets, right, buying low, selling high, using momentum, right? So if you missed last night's newsletter, you definitely want to make sure you kind of hone your skills on ranges, right, from last night's newsletter. We're back inside that range. Okay, range-bound markets, of course, tell us we want to buy low, we want to sell high, right? And the most important thing is momentum. As we mentioned last night on the newsletter, it's important that we combine the strategy of a range, buy low, sell high, along with the momentum that is leading back into that range. So, for example, right now, you'll notice it's a very bearish momentum. Right? And that bearish momentum is a very big important clue because it tells me specifically what type of entry setups will work best to buy low and sell high, right? So imagine now the range tells me the specific strategy, the momentum tells me the type of setups that I want to use to capitalize on that strategy. The range gives me the overall blueprint, buy low, sell high, avoid the middle. The momentum in the market is what really tells me how to execute according to that blueprint. As you can see here, right, I've got my trading range, I've got my sell zones overhead, I've got my buy zones right underneath. Those are good, right? I've also got this one leg down, two legs down. We're anticipating a measured move down there at some point tomorrow. So we know we're bearish. Right, we know we're bearish. In a bear momentum environment, I want to find levels of resistance that I can be a seller. So what I'll do is I'll mark up that prior swing at 93. That becomes a nice level of resistance overhead. And as I said earlier, I'm going to mark up those lows. I'm going to find what I call a hidden channel and look for now a chance to sell right off that hidden channel. Now, I'm anticipating here that some people might think this market is bullish right now, right? I'm anticipating that you might see some traders out there that say, wait a second, Joe, isn't this a spike in channel? And where does a spike in channel put us to buy zone? Right there. Right? So I would anticipate right now there are going to be a lot of buyers here who think this is a bull market, and they might be right? You know, I'm not always right about this stuff, right? I could easily be wrong on this. But the buyers in this market, I would assume, are going to come in and try to send this market back up, right, to retest those highs. And that's exactly what I'm hoping for. I'm hoping that we can get these buyers trying to run this market higher. And at that point, because I've got the bearish momentum already in my favor, I know that the odds are not very good for those buyers to succeed in holding that pullback. So I'm anticipating, again, with knowing that there was potentially a spike in channel there, right? Knowing that those buyers now are probably going to try to buy down here, right? They'll try to buy it as it goes back up. As they try to buy it now, they'll try to buy off that pullback. Momentum is not bullish right now, though, is it? It's bearish, right? So those bulls are going against the direction of that momentum. They're trying to buy outside of that range. And honestly, what I'm looking for is I want to see those buyers to buy that pullback, and I'm looking to sell right back right into that trading range. I call this a breakout. Basically, it's called a failure pattern, but really what it is it's a breakout pullback, right? It's a breakup, pullback, failure pattern. The bears have the edge right now. It's a range-bound market. If buyers try to buy that pullback, I'm looking to sell into their failure. Now, that's not the only pattern we could use. We can also look for that follow-up for what I call a pullback setup. And this, by the way, is something very, very common in all of our favorite futures markets here at School of Trade. We know it's a failure into a pullback combination. You will see these patterns all the time, right, on these charts. So you definitely want to memorize that pattern, right? We go up, the buyers try to buy the pullback, right? We now know exactly where their stops are. We can sell into those stops and, of course, look for that follow-up entry off that pullback pattern, right, coming off of that high. Great combination pattern setting up here to sell off of that high. But what if the buyers, what if they can take it, right? What if they do take it? Then what do? Do we chase after it up here? No, absolutely not. If they hold that pullback, and if we can get some strength now coming off of that pullback now, if we can get some momentum going in the direction here for those buyers, I call this a 1, 2, 3 breakout pattern. If I can get that breakout, get that continuation, now I know we're bullish. I want to find a level of support. So what I'll do is I'll mark up those highs, bring it down to that low. That's going to find what I call a hidden channel. And I always like to look for that sweet spot between that first high and the low of that new channel. I call this a 1, 2, 3 breakout. 1, 2, 3 breakout into a hidden channel, right? Find the channel first off the highs, bring it down to that low, and buy off of that low. Now, if we can get this party rolling higher, where are those buyers trying to go? They're trying to go likely all the way back up to our major levels here overhead. So if I scroll out a little bit, right, there's that gap, right, from September 15th. I would imagine that's going to be a big psychological level there overhead for those buyers tomorrow. Watch that 94.5 area. I know that gap got filled, but usually those big psychological levels, they get sticky and people will use them, right, for their profits. So watch that 54, right, 58, and possibly all the way back up into that major trading range, right, that we saw earlier on around 56 here, right? Late last month, right? Early this month. So 56 is the big target. I don't think we'll get all the way there tomorrow, but hey, we've seen some big moves on oil recently. Maybe tomorrow is the day. We'll have to wait and see how much gas they have right in the tank here. Now, what if we go sideways here back in the middle? The hardest part about a range is staying out of the middle, right? You talk about avoiding losses tomorrow. If we get stuck inside this range right now, you want to don't do anything, right? Don't do anything. Don't buy, don't sell. Just wait patiently, because remember, there won't be a lot of professionals in the market inside the middle of that range. They're going to wait for their shot to go up, get the buyers to try to buy the breakout pullback, right? Rookie traders love breakout pullbacks, and that means I love breakout pullback failures, right? We talked about this last night on the newsletter. We call this the 2-try failure setup. When a market goes sideways inside of a range, that balanced range is tough to break out. When I see the market try to break out, I know there will be a lot of rookie traders trying to buy that pullback. It's not a trending day though, and breakout pullbacks are not a reliable market, not in liquid futures markets. They might work in stocks, they might work in cryptos, but not in this part of town, kids, right? Breakouts don't work very well in futures, and it's an easy way to pick some pockets of those rookie traders or people who are new, right, to these markets here to sell off of that high. Same thing goes, by the way, now as we go lower, right? Same thing goes, we go lower here, right? If we end up going lower here, right? If we end up going sideways here now and we go lower, I'm looking for the same stuff, right? I'm looking for the same stuff. I want to see that breakout pullback. I want to see these bears try once, try twice. We now know where their stops are, right? And we're buying into those stop losses. So it's a very, very similar pattern, failure pattern, right? To buy below the low, failure pattern to sell above the high. But here's one situation you want to consider. If we continue going lower, see, now we've got momentum as a problem now, right? If we continue going lower here, okay, the last example I talked about if we go sideways inside of that range. But if we continue going lower here, now that momentum is extremely difficult to reverse. And whenever I have a strong move down, again, remember, the trading range tells us the strategy, right? Buy low, sell high. But just because I'm down below that range doesn't mean I should buy it, right? Remember, it's the momentum that actually confirms the actual tactics, the actual execution of how I want to trade it. Here's what I mean by that, right? We talked about being a seller with a buyer failure above, going with momentum. We're looking for something similar to that as we go lower, right? Moving average comes down. Now, because those bears are so strong at this point now, what you want to do is give them 2 tries, right? Let them try once. Let them try twice. And notice how I draw this up. These are higher highs, right, on these 2 tries here, right? Higher highs on those 2 tries. Once you get the bears trying once off the moving average, twice off the moving average, what I call separation and significance. They're going to be obviously 2 separate tries, right? Once we see those 2 separate tries, now we know basically where their stops are, right? Now we know where stops are, and those stops are going to help me now plan my entry, right? Right where the stops are for those sellers is where I want my entry now, going back up into that range. And maybe we get lucky, right? Maybe we get really lucky on this, and maybe we can get a nice failure into pullback combination for that rally, right, going higher here. So again, a couple scenarios here, right? A failure to sell off the high. If we go sideways, we switch back to that 1 try, 2 try sell, 1 try, 2 try buy. That's if they go sideways. Okay, stay out of the middle. Okay, notice how we do it, right? Up inside the sell zones, down inside the buy zones. No excuses getting chopped up in the middle, right? You got a good plan in front of you. But if we keep going lower here, now that momentum is too great. 1 try, 2 try, right? And then back up from there. Again, watch those breakouts. 1, 2, 3 breakout, mark the high, mark the low, and buy the pullback. Same thing here, right? Watch those breakouts, right? 1, 2, 3 breakout, strong move down, pull back to the moving average, strong move off the moving average, mark that low, mark that high. And that's almost always going to be a very reliable setup if you get that 1, 2, 3 breakout. May not go very much further, but usually once you get that 1, 2, 3 breakout, move quick, find that hidden channel, sell right up off that hidden channel high. We're looking pretty good here on the oil. The hardest part tomorrow will be sitting on hands inside of that range, waiting for those either potential breakouts or fading those breakouts on oil. Now, I've got even more great stuff I want to teach you guys here tonight, but I got to keep moving here on this video newsletter. So here's what I'll do. If you want to learn the entire trading strategy that we use every morning in our trade room, learn my 4 favorite entry setups, see hundreds of examples of how we use those setups right every day on our favorite futures markets, grab that free trading course. It'll linked up in the upper right hand corner. If you're on YouTube watching this right now, hit that link in the upper right hand corner. Get registered for our free trading classes. You'll also get access to hundreds of hours, right, of examples of how we apply that strategy to our favorite markets. You'll love that free pass. Grab it with that link in the upper right hand corner. If you're on the blog right now at Sideways Markets, you'll also find a button right below the video tonight on the blog at Sideways Markets. So either get it in the link up top, right, or grab that big red button below you there on the blog here at Sideways Market. In the meantime, let's keep going here. Got the oil all ready to go. How about some S&P? Now, as I mentioned earlier in the intro, the S&P has that bullish move in, right, into that nasty, nasty trading range. And it was pretty much, today was kind of, we kept hearing from China this morning, right? We kept hearing from China, and the market kept balking, and the market kept balking. It was a messy, messy day today, and it really underscored the ongoing obsession about this trade deal, right, they're trying to work out between the U.S. and China. Tomorrow, of course, they officially begin. We'll see if this improves for tomorrow. But again, I'm a perma optimist always, is my personality. But I won't be surprised if things are more challenging on this Emini tomorrow morning. Now, I mentioned something in introduction about how the S&P was different, right, than the Nasdaq, because the S&P did not get new highs today, right? The Nasdaq got those new highs. That means that for right now, this market mindset right now is pinned right to that range right now, right? There's very little the bulls are getting excited about right now on this S&P. And that means that most experienced traders are going to look at this and they're going to say, okay, they tried once, they tried twice, they weren't even able to get back up and retest those highs here. There's nothing trustworthy of buying high right now. Let's make sure we're ready to buy low. Right? Anybody who's trying to buy high right now has gotten not wiped out, right? But it's been very disappointing. So we now know, right? If you try once, no succeed, right? Try twice, you're probably going to flip it around and say, okay, if you don't want to go higher, I'll wait now to buy lower. And I'll look to buy underneath that range. Big psychological clue tonight on the S&P as we look at that chart. You'll notice here I've got that measured move, one leg and two leg. So if we do break out, right, we know where they're trying to go here. I wanted to make sure I got that on there so you can know where that is. And then we can dig into this video or this chart a little bit more here. Most important thing is the range tells me what? It tells me strategy. Buy low, sell high, avoid the middle. Buy low, sell high, right, and avoid that nasty, nasty middle. Okay, what momentum do we have right now? Take a guess. Are we bullish? Are we bearish? We're definitely not bearish. I'll tell you that much. We're not the most bullish market in the world either, but we're definitely not bearish. Buyers have control right now going into the range. They were unsuccessful at buying high, but that just means now people will start to, right, they'll start to place their orders now down around that big round number, that 2905 area, unless, of course, something happens overnight, right, and, of course, changes the opinion of value on this market right now. So we know we're bullish. That bullish momentum tells us what? The tactics that we want to be using, right? That's the most important thing. Now, I want to buy low, stay out of that middle, and sell high. Let's talk about if we get the pullback here first, right? Most important thing right now is if we get a pullback. Now, the depth of the pullback is going to be a big, big part of this. Okay, for example, let's say, for example, right, and I really have my eye on this area right down in there, right? Just like they came in here this morning, right, and bought that deep, deep dip below that range here. As we go lower, right, I want to get down into that 2906 area, right? Let's bring this a little bit forward here real quick, right? I want to get down into that 2906 area. And again, as said earlier, momentum is bullish. I know that rookie traders, they love to trade those breakout pullbacks. Problem is, in futures markets, liquid futures markets, breakout pullbacks don't work very well. So, of course, I want to anticipate, if I was a seller, where would the pain point be? At what point would I start waving the white flag and saying, I'm out, right? I'm out. I can't take it anymore, right? At what point would those sellers, would they start losing money? Where are their stops located? Because if you're a short seller and you get stopped out, what happens? You've got to buy your way out, right? You may not realize that, but when you get stopped out of your trade, you are technically now a buyer. So guess what? There are buyers sitting right there, right? If you want to really break it down, there are buyers waiting right above that high. Now remember, you want to make sure you don't get in inside the range, right? But I want to make sure, though, if I can get a nice strong push down, get those sellers trying to sell that pullback, I can now look for that failure into combination setup, right, which of course we talk about quite a bit, right, on that free trading course that I mentioned in the upper right-hand corner, right? So failure pattern, right, into pullback pattern. But what if we keep going, right? What if we keep going? What if we really tumble? You know, like I mentioned earlier, big round number down here, a trend line coming in, right? That area looks really, really desirable. The problem, though, is that's going to erase almost that entire move. So what does that tell you? That tells you now momentum is going to be a big deal. It won't be something you can ignore anymore. So as we go lower here now we've got to what? We've got to respect the market's momentum, right? Momentum tells us these specific tactics to keep in mind, right? So 1 try off the moving average, 2 tries. Again, these should be higher highs, right? 1 and 2. Think of it this way. Sellers want to sell high. Buyers want to buy low, right? We look for the bears to try once. They're not going to try it again at a lower price. They'll try it again at a higher price. We look for those higher highs. Once we see that 2-try rule, now we know where stops are, right? And we're buying as the market now slingshots, because that's exactly that's what it feels like. Buyers are buying off that low. Sellers get stopped up. They become buyers off that low as well. That's definitely a pattern that we're watching for here. So a lot of it has to do with, is it a shallow pullback failure? Right? Or is it a deep pullback with what we call a nested failure pattern, right? Failure pattern inside of a failure pattern. And again, you'll learn a lot more details about that simple pattern in that free course I mentioned in the upper right-hand corner. But what if we go higher here, right? Again, if we go sideways, sit tight, right? Sit tight. What if we go higher here, though, in the overnight? Again, we may hear, remember they open up in Asia in about 15, 20 minutes here right now, right? So this could easily get very interesting. Who knows what the headlines will read in Asia and what we can do in Asia. So tomorrow morning, right, we may come out here, we may see this market running higher. Now, first of all, right, as we go higher here, how do I sell it? How do I sell in a bullish momentum market? Very patiently, right? Let them try once, let them try twice, and sell. Okay, now one thing I always like to remind you is when you've got a bullish momentum like this, and you've got potential right now. I realize they didn't make a new higher high here, but what I would recommend is, instead of looking for your straight crown, right? A straight failure, look for a crown reversal, right? This will be a little bit more of an edge you'll get, right? In other words, as we go higher, we know the market's bullish. We know there is definitely some optimism about that trade, right? That trade deal. So trying to be too aggressive might not be a great idea. Let the buyers try once. Let the buyers try twice. And the real sweet spot here will be a trap high above that prior swing. That's going to be the good stuff right there, right? So we run up, buyers buy once. Remember, you're trying to sell in a bull market right now, right? Let them try twice, okay, against momentum. Momentum is the clue here. And again, because of the variable trade deal, look for that trap high, right? And you'll be good to go for that sell back down in. What about a breakout pattern, though? Here are 2 breakouts. First of all, know where you're going, right? Know where you're going. That's the most important part, right? Know where you're going. Second thing is, look for that first strong move up. Okay, here are 2 breakout patterns. Keep an eye out for tomorrow. One's called a 2-try breakout. One is a strong move up. 1 try for the bulls, 2 try for the bulls, buying into those stops. Okay, now what's really going on right now is if we see a strong push up, right, real strong, again, open up in Asia, headlines are saying we found a deal, right? It's that type of bam, right, big move up. At that point, that first pullback will actually be buyers taking profit. It won't be sellers getting in. But the second pullback, though, those will be sellers selling above that prior swing. Okay, aggressive sellers trying to scale into this, right, back into that range. Okay, so again, strong move up, confirms the potential breakout. 1 try, 2 try, now tells us we can buy into those stop losses. What this pattern does is it basically runs the stops of the aggressive sellers, forces them to cover their position. They become buyers. But more importantly, all the buyers who got out on that first pullback, when they see this thing ripping higher again, they're not going to sit on the sidelines. They're going to jump back in. They're going to jump back on the bandwagon, and that's going to fuel this market up to getting that measured move, right, for tomorrow morning. Now, I call this the 2-try breakout pattern, right? You'll hear me call it the FOMO breakout because it's exactly what you're doing, right? You're triggering the FOMO, the fear of missing out on those, right, on those breakout buyers, and everybody scrambles to get in. Okay, we stay patient for 1, 2, but then from there, it's on, up to that measured move from there. All right, guys, we'll definitely be watching for that breakout with that strength. Now, if we don't get that strength, look for a 1, 2, 3 breakout. We talked about this earlier on the oil. I don't need as much of a strong move in this one, right? On the 2 try breakout, it's got to be like blow your hair back, right? Strong, right? We don't need that much strength, but we do need to get up above the range. Show me now those buyers mean business and they can hold that pullback. Once we see some good personality jumping off the moving average there, right? They could have had it back here, 1, 2, 3 there, right? Didn't get it there. But once they do get it, mark up. Remember, once they do get it, now it becomes a trend and it's a bull trend. So find a level of support. Find the highs, bring down to that low. I like that sweet spot. Right there. That's usually where you're going to find, right, the best pullback there. And I say pullback, but in all reality, right, it's a lot of times it ends up being a failure into pullback combination. Okay? So think about it that way. It's not necessarily a pullback setup like we talk about in the free course, right? It is, of course, right? It's a pullback low of that channel. So imagine, right, that area right there is kind of blown up there for you. A failure pattern below the moving average into a pullback pattern back above the moving average. And again, guys, I'm just simply marking up the charts right now, right? Take that free course. You'll love the free course. The free course, I think, is the best in the business. People love the course as far as the feedback I get. I really enjoyed making it for you guys. Plus, it gives you access on that free pass as well. So grab the free course upper right-hand corner. That covers us there for the breakout. Same thing to the downside, right? Now to the downside, right, want to see that 1, 2, 3 break down, mark that low, mark that, right, that high, and sell above that high. Okay, so remember, that knife cuts both ways, right? If we run lower, hold that pullback, 1, 2, 3 breakout, we can sell off top of that bear channel, right? I don't care what direction we trade in. All I care is the valid pattern goes with momentum. Let's keep going. Over on the Nasdaq, like as I mentioned earlier on the Nasdaq really has a lot more bullishness to it, right? The fact that they had that big strong run up, and they didn't get much out of it, but they were able to at least double top on it, right? So now there's no falling resistance, you know what I mean? Now there's nothing to worry about. The buyers now, for the most part, have a clear line going higher. Right? As opposed to on the S&P, right? These buyers don't have a clear line going higher right now, do they? I didn't mark the trend line up. It's not really relevant, right? But the buyers can't really get a clean line going higher. They have those lower highs, right? So it's a big technical kind of boon, right, for the buyers here. It's also a very big boost of morale here for those buyers. Now, anytime I see a strong move up, a pullback, and a higher high, I draw a trend line off of those 2 highs. I bring that trend line down to those lows, and that creates a spike in channel, right? And spike in channels are notorious for that deep pullback into the base of a channel. We talk about these quite a bit on this newsletter, but I don't think we've had one in a while here, right? Anytime I see a spike up, again, I get those higher highs, right? Mark up that channel. When you see a spike into a channel like this, what I always want to do is grab that first pullback, okay, mark that, and then look at where the spike runs into the channel right there. Okay, think of this now as kind of your buy zone, right? Or as I call it, the battle zone. It's an area where a pullback, right? People ask me all the time, what is the battle zone? The battle zone means it's an area where we have a deep enough pullback to the point where the buyers and sellers will do battle, right? For control. Now, because this market is overall bullish, the buyers usually win that battle. And we look for that very classic and very typical, right? You got your failure into pullback combination, and then look out for that to be a measured move, right? Going higher for that big target. Okay, so think about that, right? Screenshot that if you want to right now. Find your spike in channel. Most importantly, wait for that deep pullback, right, into the base of that channel. So if you look at this chart right now, mark up those highs, bring it down to that low. Where's the base? It's right here. There's your first pullback. There's the base right there. Okay, so kind of put a pin on, put a pin in that idea real quickly, right? And now think about, forget about the channel and find your range. The range is anytime I see a range on the chart, the range is the superstar, right? The range is the king or the queen of this market right now. This is a range-bound market. There's no if and ors or a buts about it. It is a range-bound market. There just happens to be a higher high on this, which gives those buyers that burst of energy, right? That morale boost that the S&P doesn't have. Now, talking about a range, what do we do with a range? We use that range to find our buy zones and our sell zones. And conveniently, right, you can see that as the market goes down, it goes back up. As it goes up, it goes back down, right? So this is nothing new. We know that range-bound markets are balanced markets. They're going to want to go up, right, back into the range, go down, back into the range. What is interesting about this, though, is it all comes together around that 76.60 area. That is the overlap of the buy zone from the range and the buy zone, right, from that spike in channel. So that really is where I'd like to see us, right, buying here for tomorrow. But, right, we may not get that, so we also want to make sure we're okay with being a buyer as we go, right? So let's talk about these here real quickly here right now. That trend line is not going to be an issue any longer. We know we want to buy low. We know we want to sell high, right? What if we make a run lower here? As we run lower, I look for that classic combination, right? That classic combination of that seller failure into bullish pullback, right? Going back up into that trading range. If we happen to really take a dump, right, a nosedive, right, and it really runs, then we can look for the nested, the one try, the two try, and back up in from there, right? So again, if we pull back into what we should get here, right, as far as the pullback area, we'll simply looking for those sellers to try, right, selling off the pullback. We'll look for where their stops are going to be. We'll look to buy into those stops, grab that, right, pullback if we get it. Sometimes that pullback doesn't come, or sometimes that pullback happens inside the range. Okay, so it's not always going to give that pullback, but I'll tell you that failure pattern is really, really common when we go down below that trading range there. And again, right, if things get spooked and we really make a nosedive, then just look for the one try, the two try, right, and then up from there. That's called a nested failure. Okay, so if we really tumble, then you know to look for, right, the nested. And if you don't know the difference, well, then make sure you come out and join me tomorrow morning in the trade room, and I'll walk you through how to tell the difference between a pullback and a real good, real good flogging right to the downside there, and which pattern you want to use. Now remember, right, as we go lower, if they hold that pullback, right, and run, that becomes the 1, 2, 3 breakout. Mark that low, mark that high. You got it. And we're selling off that high. Right, where's my target? Target's back down to retest that low. But what if we go higher here? Right? What if we go higher here? Again, stay out of the middle. Right? If we do go sideways, though, we can go up. How do we sell? How do you sell a bull market? Patiently, right? One try for the bulls. Two try for the bulls. Ideally, you get that trap, one try, two try, trap high, much we talked about there on the S&P for the sell back down. Okay, as we go higher here, strong move up. Now, a little bit different here. What's the Nasdaq got? They got that measured move right overhead. But look, there's not much space up there. The S&P had a lot more open space. Right? The S&P could put a swimming pool right up there above that range. The Nasdaq, not so much. So that's another very important thing. That's why I always remind you guys, before you trade breakouts, before you look to trade after that, right, that breakout higher, know where you're going. If you don't know where the market's objective is, you should not be trading. It's like buying a plane ticket for a place you don't know where you want to go to. You got to know where you're going, right, to plan your trip. So we got to know where we're going. We know we're going to the measured move, right? Two patterns here now. First one is that strong breakout. Right? Real strong breakout. Measured move is resistance. Anytime I'm concerned about overhead resistance, I now look for a slightly more conservative, aka more effective, more reliable setup, which I call, again, a two-try breakout. But on this one, I'm going to make sure we get a trap low on this. Because that momentum is so strong, I do want to be a buyer. Right? Again, I want to let the buyers take profit. Okay, let the bears now try to come in and sell it, and ideally get the little trap low, Bingo. Nice, easy scalp. Take a quick first target. Let it run. A trade like that can get a quick first target easily, and then you might find yourself in for the rest of the day on that runner, right? That's how much potential a move like that has. But of course, we don't know how far it'll go, so we have to prepare for the worst, right? Prepare that they're going to run right into that measured move. Okay, prepare for the worst, get that trap low. Or we've got the 1, 2, 3 breakout. Mark the high. Now this is one that's interesting. Okay, because if we get the 1, 2, 3 breakout, if I can get in before we get to the measured move, then I'm a happy camper. Okay, repeat that again. If I can get in before we get to the measured move, I'm good to go. But a lot of times when we get a measured move like that, right, let's say we go up real fast, right, up to that measured move. If we go up to that measured move now, a lot of times we'll go sideways up here and then we'll get the pullback. So what you want to look for is we get the measured move, wait for the consolidation, profit taking, wait for the market now to try to pull back. It will almost always pull back off that high. The counter trend sellers will almost always think it's going back into that range. It's not a range bound market any longer though. It's a bull bias. It's a breakout market now. And anyone trying to sell right off of that pullback now is asking to get stopped out and a retest. You talk about a fast retest. Those types of retests are really, really fast. Okay, most of the time when you get a strong move into a measured move or a high of day or any major objective, in this case it's a measured move, just wait for the pullback. Wait for that pullback. Don't sell the pullback, right? But buy into those sellers' stop losses. Now don't get me wrong, right? If they do hold that pullback, okay, now we're bearish. Now find that, right? Now find that channel. And you see what all comes together, right? There's a plan for every step of this process. Now, I lay out most of that plan in that free course, right? You'll see the blueprint of that plan, right? One of my favorite entry setups for that plan, right, in that free course I mentioned earlier. Also, if you're on the blog right now, big red button below me here tonight on the trading blog at Sideways Markets. Nasdaq, nice looking chart tonight. We'll see what tomorrow brings here on the NQ. Last but not least here, over on the gold, the yellow metal, the mighty yellow metal. I told you there's one really important clue here on this gold right now, and that is the time of that triangle. What's the most important stuff? What do we know right now? What do we know? We know we have a range, right? We know that range has a bull bias. Bull bias tells me buy low, right? I can be a lot more aggressive buying low. Sell high. I've got to be patient, right? Disciplined in selling high. We've talked about this a couple times already here, not just tonight, but yesterday too, right? So we know that's the plan, right? There's one big thing though, and that is imagine for a moment that you weren't there, you were right there, right? I always tell my clients to go back to the beginning of the day, right? And start to kind of roll the market forward, right? Because oftentimes when you know what happened, it kind of blinds you to what happened, right? So now roll it forward, right? We know right now. What do we know right now? That's a range, right? It's a range and an expanding triangle, right? And by the way, guys, expanding triangles are super, super reliable. They're great because they give you a chance to buy really low and sell really high. Okay, I picked up on those expanding triangles a long time ago. They're a must-use part of your range arsenal. At this point now, it's a range with an expanding triangle. But watch what happens here now, right? We make a failed attempt off the high. We come back in now. At this point now, what is that market now? Now it's a triangle. Now it's a narrowing triangle. Now, what do narrowing triangles mean? Well, in a bull market, a narrowing triangle tells me now when that triangle comes together, right? When that triangle expires, that's why I said earlier, there's a time essence to this now. When that triangle expires, we're going to probably get one of three scenarios. One scenario is a shot lower, which will usually fail and come right back up to that triangle again. That's what I'm hoping for. Or second scenario would be we get that strong move higher, right? Kind of that 1, 2, 3 breakout going higher, a triangle breakout. By the way, if you're a penny stock trader, right, that is one of those trades that works a lot on the more illiquid stocks, right? But you don't want to try to predict those on futures. Remember, breakouts don't work well on futures. Okay, or what happens a lot is we go up and fail back down into that range. Okay, so the bottom line is that when we get that triangle coming together, right, it's firecracker time, right? There's usually a lot of personality, right, that comes into this market. Another thing you want to think about when it comes to a triangle is to pay attention to the swings. Okay, this is also something a range doesn't really offer us, and that is, a rectangle, right? Find the swings. The swings around these edges are usually where, I always sort of tell you guys, think about the people in the market, right? When there's a range in the market, what you're going to see is a lot of traders, they'll put some sell orders to sell overhead. They'll put some buy orders, right, to buy underneath, and they'll just wait. That's a very common strategy for people who have some deep pockets, right, in big trade accounts, right? They'll sell high, they'll buy low, and they'll literally leave their orders just hanging out down there, right? Now, obviously, because there's a bull bias to this, we want to be more of the buy side, right? And that's what we're trying to do. So find those edges, right? So now as we go forward here now, you'll notice they jump up overhead here, right? They jump overhead, but they almost immediately now go right back into that range. We are moments away, right, from that firecracker getting lit, right, and hopefully getting some sort of breakout move. Now, whether or not that breakout move will go anywhere, right, we'll see, right? We'll see. So here's what we're going to do. Find those swings. Find those swings. Okay, we're bullish overall. We know the general strategy. Momentum is bullish. That tells us the specific tactics we want to use. I love that triangle, that expanding triangle, I should say, right? Love that. That's a great area there. And that's ultimately now kind of what you're thinking here to be a buyer. At the same time, we may also see that breakout going higher or that break up and back in. Okay, all three of those scenarios, right, are on the table here right now on the gold. So first of all, let's talk about the buy side here, right, as we go lower. Okay, the big thing is we don't know how big this breakaway, right? We don't know how big this boom is going to be, or if we get anything at all, right? Let's make that very clear, right? If these markets are just too obsessed about this trade deal and we keep going through it, then, well, sorry, but the fuse is a dud. Right? That's going to happen sometimes, especially with that big news here for tomorrow, right? If we do go sideways on this chart, stay out of that middle, right? If we do go sideways, stay out of that middle. If we chop around sideways, what's the plan tomorrow? Buy low, sell high. If we go sideways, they'll want to be a buyer, right? So wait for the market going lower. Moving average comes over. Sellers try to sell off of it. Failure pattern into pullback pattern back up. If we go higher though, because the bulls have the edge, we go higher here, 1 try for the bulls, 2 try for the bulls, and selling back down in, right? Momentum is the giveaway, right? That's the key. Okay, but what if we run down to that low, right? If we run down to that low now, again, same idea. Right? We get those sellers trying to sell off the moving average, right? It's not a huge momentum swing. Okay, we'll talk about that in a moment. I get the failure pattern into that pullback pattern, going back up into that trading range, right? Buying into the stops of those breakout pullback sellers, buying, right, the rest of the move going back up into that range. Pendulum swing, the amount of the move below the range is the amount of the move above the range. That becomes your big target on the other side. But what if this thing gets whacked, right? What if it really runs down to that big round number? Now what do we do? Remember, the odds are pretty good. We're going to come right back up into it. We haven't broken out yet, right? We haven't held a pullback yet. We wait for what? The 1, the 2, and back up again, right? I want to see 1 try for the bears, higher high there, higher high, 2 try for the bears, and then from there, we're buying it back up into that trading range. Maybe we get lucky, right? Maybe we get really lucky here, and we get that failure into pullback combination. A lot of times though, again, you'll get the failure, but the pullback may not pull back. right? It may just run right back into that range. And that's a good problem to have, obviously, right? We try not to complain too much about that when they go straight back to those ranges like they love to do. Okay, so we know that's the plan here for those buyers. As we go higher here, can I sell? Can I sell? You can, right? But 1, 2, back down again. What about the breakout? First of all, know where they're trying to go. Where are these buyers trying to go? What is their mission to accomplish? Right? Let's cut to the chase there. The buyers want to get back to that 1525.9. Right? Everything else is a minor level overhead. That also lines up nicely with that measured move. Right? That measured move is right up there as well. So we know where the market wants to go. That's more than half the battle. Okay, that will help us structure it. Like the S&P, we got quite a big chunk of space up there, right? So we got the first one is that 1, 2, 3 breakout. That does not require a whole lot of momentum. Just got to make sure those buyers can hold that pullback and get me some personality jumping off that moving average. Mark up the high, mark up the low, find that sweet spot, and we're buying on the way up to that measured move. Or, right, strong breakout, 1 try for the sellers, profit taking, 2 try for the sellers. We don't need to worry so much about the trap on this one, right? It's always a benefit. It's always an odds enhancer, as we say, right? Right? It's always a benefit to get that trap low, right? If you can get that trap low, then even better, right? But at this point now, if we get a strong break up, right? Bears come in, they try to sell once, they try to sell twice. We're buying into that failure on that second try, that FOMO breakout pattern, right? That 2-try breakout pattern. Same thing goes for the downside, right? We go down, 1, 2, 3, break down. Remember, though, you're going to want to make sure you wait for that proper breakout to the downside. Okay, I'm not looking for a 2-try breakout to the downside because we're bullish. Okay, we have to first turn bearish. I can look for a 2-try breakout pattern overhead because we're already bullish, right? We're throwing gasoline on an already burning fire, right? If I go lower, I can't do that going lower. We're not bearish yet. I have to get this market 1, 2, 3. I've got to get us bearish. Hold that low now. Run to that lower low. Then I can start planning my sell from there. Okay, hopefully that makes sense to you guys out there. And guys, don't forget, I explain a lot more details of all of these patterns inside of that free trading course that I mentioned earlier on and throughout this video. And as always, don't forget, guys, every morning, Monday through Friday at the opening bell, 8 o'clock Eastern time, right? I want to see you there, right there with me, because trading it with me in the trade room, that way you're not stressed out, you're not just guessing, right? And you're not getting, right, all those typical rookie losses that most people have no other choice but to learn from as a new trader. Don't forget to get started tomorrow morning with me in the trade room. I'll put all the links in the description of the YouTube video. So if you're on YouTube right now, check out the links. All of them are in the description. That free course is linked in the upper right-hand corner. If you're on the blog right now, there's a big blue button right below me tonight on the trading blog at Sideways Markets. So grab the description links, right? Hit that big blue button below the video on the blog, or head to the website, right, at schooloftrade.com and get registered as an advanced course member. There's a brief orientation. You'll grab the links for tomorrow morning's trade room, and I'll see you tomorrow morning at the opening bell, right? And we'll do this together. If you're not ready yet to be a member, that's great. No problem at all. Grab that free trial, though. Definitely grab the free trial, because the free trial will give you access to our free pass to our trade room, our free trading courses, and obviously hundreds of examples of how we apply what we call our 3-step strategy to our favorite futures markets. Don't forget, if you have any questions whatsoever, call that toll-free phone number. I'm always here to answer that call, or hit me up on live support right below my ugly mug here tonight, right? Hit me up on live support there below the video tonight, right? And ask questions there. In the meantime, enjoy your rest tonight, right? Rest up, right? Enjoy the game on TV tonight if you're in the U.S. And we'll see you guys tomorrow morning at the opening bell. And one more video for tomorrow night. We'll wrap things up in tomorrow night's newsletter. Come back and see us again soon sometime, all right? As always, my name is Joseph. Be well out there. Be nice to each other, will ya? And be here next time. Adios, amigos. Bye-bye for now.